And welcome to this video. In this video we are going to talk about Unilend finance, and the project has been around for a while, and the market cap is around $26 million. Of course, fully diluted valuation is around $41 million, so still pretty much supply with the team. And these are some other stats if you want to go and look into it. Now we will directly go into the white paper, and just we will go through a quick look at the website, Unilend Finance website, before we quickly go through the white paper. So the concept behind Unilend Finance is very simple to Aave or other lending and borrowing platform, but Unilend tries to take it to a higher level by making any uh, a crypto asset or any token to be lent and borrowed, which is a pretty cool thing. So you can say that the way Uniswap created a market, a revolutionary market where people can trade and borrow any asset, any crypto asset. Same way Unilend is trying to create a market where people can trade and lend any whatever asset they want to trade. I mean, not trade, lend and borrow any asset they want to. So that is their idea. I haven't actually used this app, so I am not sure how it works, but we are going to understand what the project is all about in more details, and I hope that you are going to love this content. uh, so permissionless listing, which is one of the key features, because the thing is that in projects like Aave, they are actually, even though they are using blockchain technology, and it means you can say that in a way that they are decentralized project, but actually those projects are driven by a handful of people, a team of maybe 10, 15, 20 people who are making decisions about billions of dollars of lending and borrowing process, which is quite centralized. And of course the same thing is going to happen here as well, but one difference between Aave and Unilend is that Unilend is trying to make it permissionless. So in Aave, the team decides which token to be lent. One should be able to lend and one should be able to borrow, but here any token can be lent and borrowed. So start here, as you can see, there are more than 9,000 assets available for lending and borrowing, wherein in Aave those assets are probably 10, 15, 20, maybe they have increased a bit. I haven't visited aave.com lately, but something like that. So pretty much a permissionless thing here, if you personally ask me. And create a dual asset pool to enable permissionless lending and borrowing for any asset pair, providing flexibility to lenders to choose the assets against which they wish to lend by selecting a corresponding pool. So yeah, apart from that, isolated dual asset pool is also there. You can check and study more. We'll get that, we'll study that in the white paper, but if you want to know more, then you can also go into the Telegram group here and on their other social media platforms and ask the team if they are available. So anyways, now let's quickly go to the white paper. Sorry, yeah, this is the white paper. So I have already gone through the white paper twice to understand what the project is all about, and they have updated white paper a couple of years back probably, and since then they haven't updated it, but still you will get pretty powerful information about the Unilend protocol and what it stands for, and mainly what the project is all about. And also I will give you my insights about what the ideal conditions should be for projects like this. So Unilend protocol is a permissionless decentralized money market protocol with lending and borrowing service through smart contracts. Unilend enables users to utilize their cryptocurrencies by supplying collateral to the network that may be borrowed by pledging over collateralized cryptocurrencies. This creates a secure lending environment where the lender receives a compounded interest rate annually paid per block, while the borrower pays interest on the cryptocurrency borrowed. So this is a very simple thing which I hope you understood. It is all about lending and borrowing. So now let's quickly go through the problem. No matter how the decentralized finance project, the user's journey usually starts with locking the value in the smart contract. As of this writing, there are nearly 80 billion as worth of assets in different DeFi protocols. This is a tenfold increase. This chapter considers the three most significant challenges for decentralized finance, which Unilend is uh, overcoming with its innovations. The solution: the current players in the lending DeFi have limited the assets on their protocol, which is a, that's what I said in the starting, right? The if you go on the websites like Aave, which handles billions of dollars of lending and borrowing process, they have, you know, very limited assets, maybe 5 or 10 or 15 or 20 maximum. That's all they have, if but not infinite amount of assets. So if you have your own token, and if you want to create a lending and borrowing market for your token, then you won't be able to do it on Aave, but probably here, according to them, in their white paper, at least that's what they're saying. And I have, because I haven't used their app, so I don't know, but this is what that concept is. But again, let me be clear that there is one very important factor which you must consider, which you must accept, that this protocol, even though it allows many assets to be lent and borrowing, some of their assets will be risky, and mainly the protocol itself is being managed in a centralized way. So most cryptocurrency investors are not even in their dreams are thinking about what is the difference between a centralized management and decentralized management. So most investors think that because they mentioned here that they have a permissionless decentralized money market, it means the project is decentralized. Here also that's what they are trying to say on their website, that decentralized permissionless market protocol. But in reality, it is being handled by a handful of people. So the role of the community is going to be very important. Yeah, it is possible that the project succeeds like Aave, but even though it will succeed like Aave, someone will come with the same project, same features, and they will have a more decentralized approach, because the community is handling that project. Sooner or later, that is exactly how things are going to turn out to be, and that is where the projects fail. Most of the cryptocurrency projects, 99% cryptocurrency projects, fail only because they cannot build a super powerful bond between them, or between their own community members. So if the community members do not have a powerful bond between each other, then they are going to fail in the longer term. It is possible that they succeed. A lot of centralized cryptocurrency centrally managed cryptocurrency projects are succeeding, but those projects have lots of downsides. I mean, they, even though they are surviving, they do not find the trust between them and investors to share their profits and all that. Lot of things are going on there. So just remember that the community's bond is going to be the key. If there is no bond between the community, then the community will not be able to take part strongly in this process of this project. And if that is not going to happen, then the project may succeed. I am not saying that it won't succeed, but it won't be a satisfactory success, and it won't be a long-term success. That's what my point is. So decentralization is the soul of cryptocurrency market. Because the cryptocurrency market is not regulated, you will have to accept this fact. The problem with most crypto investors is that they behave dumb. They behave dumb means so much that you can't even express in words, but still I will try to express it in the words. They behave dumb because they think that, you know, we don't care about the governments, and we are against the traditional financial institutions and all. Okay, well, that's good, but that's not how the things will work. They had one very powerful thing in their own in their favor, and which was that they were able to control the scamsters, and you cannot deny that fact. Okay, so here also in the cryptocurrency market, if one needs to control the scamsters, then the protocol has to be driven by the community. If 500 people are taking daily decisions about a protocol, then it is likely to unlikely to be turn out to be a scams. So you will have to replace the government advantages which we had in the traditional financial institution by making the project decentralized. And that's why the crypto is succeeding. That's why Bitcoin itself is succeeding, because things are getting decentralized day by day in many different projects. And that's all you have to do. And the biggest factor which can drive decentralization will be the community bond, the community's connection with each other, the members of the community, no matter how big or a small investor he is. Their internal connection, their internal bond with each other is going to create a lot of difference when it comes to the long-term success of this or any cryptocurrency project. Now let's go to the products and services. The Unilend protocol uses a dual asset pool based strategy in a permissionless nature. As a result, Unilend Finance users can supply any ERC20 asset and earn variable based interest rates depending on the market and pool interest model. So this is a very key part, that any ERC20 asset can be supplied, and which is a very good thing, and that's what people want. They are looking to find different ways for their token to generate liquidity. So that's why this is a good feature, and that's why this protocol is definitely unique. But again, even though the protocol is unique, many protocols in the past have come and they were unique, but they turn out to be a disastrous for investors, because they were not decentralized enough. The community didn't create a bond between each other, because community totally relied on the team, and when the community totally relies on the team, they are likely to fail in the longer term, even if they succeed in the short term. So that's why community bond attracts decentralization, and that's how the long-term bonding between the community members and the team will create something very fruitful which can survive in the longer term. That's what my point is. In the world of finance, long-term survival creates a lot of value. Now let's go ahead, that we have also covered the primary difficulty lenders face and overcome the depletion of lendable assets and the inability of lenders to redeem their assets. In addition, we use third-party and automated liquidation programs that act as cushioning to the entire system. This allows Unilend Finance to build a system of checks and balances to incentivize market participants and make sure the liquidity in any given asset isn't scarce given current levels of borrowing. So this is their own system, their own the team which is running the project right now. They have this some factors which they consider to involve to control the liquidity issues and other things. So even as a community member, if you are a sincere community member of this protocol, then you will have to understand all this, and you will have to communicate with the team about how you can take part in all this daily process. If as a community member you guys do not take part in the daily decision making process of all these projects, then it is unlikely that the project will ever become decentralized. So the community is never interested. Generally, that is the biggest problem, the biggest hurdle with every cryptocurrency currency project. These ideas are great, but what they lack is community support, community's bonding. They want to hand over the project. Even in their white paper, they have mentioned it couple of times that again here you can see the governance process. So now let's go through this, and then I will talk about it more. Users who wish to borrow any supported digital assets from Unilend must pledge collateral to be locked in the protocol. This is done using the same mint function used for supplying assets. Collateral earns interest while in the protocol. However, users cannot redeem or transfer assets when used as a collateral. These assets must be over collateralized, and the collateralization ratio are determined by the protocol, which can be controlled through the governance process. So I will explain it to you because I don't see any example here. What they mean is that there is always going to be some extra money which you'll have to put. So maybe probably 80% or 90% or 70% money you will be able to take instead of when you put 100 USD, you will be able to probably borrow 70, 80 or 90 dollars. That's all you are going to get, not the entire 100%, and that ratio will be decided by the governance process. So again, they are depending on the community, and that's what my point is, that any cryptocurrency project will have to depend on the community in the longer term, even if in the shorter term the team of 5 or 10 people are doing it, and that's where the value comes. So you will have to see this from the smart investors perspective. If let's assume that you hold this Unilend Finance token or Unilend token, UFT token, right? So what you want is ultimately the tokens price to go up, but the tokens price will only go up when big money comes, and the big money only sees one thing, which is decentralization. What is the bond between community members? Then only the big money flows in. The Bitcoin network has big money because they understand the network is decentralized. So same rule applies here. If it is decentralized, if the people are going to take, if the community is so look at the project. The team is doing their best to create the best of the best project, right, with the best technology, and probably everything they are doing that great, unless they are exit scammers. I don't know, I haven't researched about the team, but they are probably not going to do that. But I cannot guarantee anybody nowadays in cryptocurrencies, but let's see from all this work that probably they are genuine, and if that is the case, then team is doing their best. And if the team is doing their best, then what they lack is community support. If the community takes part into all these processes, then they will attract big money, because big money only sees one thing, that how much community is involved, what is the role of the community. That's what their ultimate criteria is to invest in any cryptocurrency project. So that's the reality. Now let's see the borrow rate. So the borrowers owe an interest rate of the assets they are borrowing, which keeps adding to the user's borrow balance every block. So while the borrow is open, the borrow balance keeps increasing. So this is also pretty understandable, very basic finance thing. The borrow balance, this represents the total amount borrowed by the users in addition to the interest that needs to be repaid. This is calculated with a function in each NFT liquidity contract. There is a maximum amount that users can borrow for their collateral, which is defined by collateral factor. Let's say a user lends 100 USDT in XYZ pool, and the decided collateral factor is 80%, then the users can only borrow 80 USD. That's what I tried to explain earlier. This is the same thing. Unilend Finance converts a certain portion of borrow interest into reserves. These reserves may be used for incentives, liquidation, protection, and emergencies etc. Again, this is going to be decided by the governance in the longer term. If the team is going to decide all these things, all these complex factors, then the project becomes centralized, even though they are going to use the decentralized protocol and blockchain technology. But that is not what decentralization is. Decentralization happens when the community takes part into it, and that's why I keep repeating the only rule which every project needs to follow, and that is how much the bond between the community members is, how much the community is involved. That is the ultimate factor, because all these complex decisions has to be made by the community. And when big investors will see that the community members are regularly performing well, then only big money will start coming in. And this is why most cryptocurrency projects fail, because they do not want to go through this lengthy process of taking part in any cryptocurrency projects management. So because they will have to commit for a pretty long period of time for this project. So that is the reason why most investors avoid this kind of commitment with any cryptocurrency projects. They feel that it is better to just throw some money and make some profit if the token goes up, and they are ready to lose money when the price goes down, because they are putting very limited amount. So that is the reason why, if they themselves are not throwing too much money in a particular project, then how do you expect that other big investors are going to put so much money in this protocol? No, that's not how things will work. They will see that how much community is involved in day-to-day operations, how much community is interested in the governance factor. So again, they are mentioning the same thing. Initially the reserve factor, this thing will remain 0 and will be subject to governance upon the launch. So everybody subconsciously knows that the governance is going to be the key part for any cryptocurrency project's success, but nobody talks about it. I don't know why, nobody has guts to talk about it, but for whatever the reason, only the good governance, a decentralized approach to a project through management, is going to drive big investors' money into the project. Now, liquidation threshold, it is defined as the percentage at which a borrowed position is considered under collateralized. For instance, a liquidation threshold of 75% would indicate that if the value rises above 75% of the collateral, the position is under collateralized and could be liquidated. The help factor is a Again, this is very easy to understand. Even if you do not understand some words, then you can just google it and you will get the explanation required, because this video is getting already very long, so I don't want to get into the extreme details, or otherwise this video will become a 2 hour long video, and we do not want that. In the cryptocurrency market, investors are addicted to quick things, so they do not like long videos. But still I am trying to explain everything, so it is going to at least take some time. Now the health factor is a numeric depiction of the security of your lent assets against the borrowed assets and their basic worth. A higher value of health factor represents the more secure state of your funds against a liquidation scenario. Again, this is very similar to when you do a leverage trading on Binance. If you have ever tried that for the fun or for whatever reason, you will know what the health factor looks like. So the closer you are to the liquidation, the worse your health factor ratio or liquidation ratio gets. So utilization rate represents the percentage of the amount a user has borrowed from his allowed borrowed balance against collateral. So this is also very easily understandable. I am not going to get into that now. There is this flash loans, which I do not understand properly. I have been in the cryptocurrency market for a long time, but I still do not understand this concept of flash loans. But you can google it. I am sure you will be able to understand from that. Permissionless listing of Unilend's lending and borrowing is powered by dual asset protocol model, where any user can create any ERC20 pool to begin lending and borrowing for those assets. This kind of isolated model ensures a higher level of security, where the volatility of one asset doesn't affect the entire protocol and is limited to a single or few pool. So again, when you are doing things on such a large scale, then you will have to take isolated lending and borrowing process. So this is pretty understandable, and even if you do not understand anything in this white paper, you can simply go to the team and ask them what this means and how this works. As if you are seriously interested in any cryptocurrency projects long-term growth, then you will have to take part in the community and governance process, and the more a community controls a project, more decentralized it becomes. And that is what the concept for every cryptocurrency project should be, that in the end the governance process should be able to take its own course, and that will drive big investors money to flow into any cryptocurrency project, because big investors want security. Security comes from long-term sustainability of any cryptocurrency project, and that long-term sustainability will come only if it is handled by the community, and for that community will need a very powerful, strong and solid bond between them. So now these are the interest rate calculations. You can go through it. This is, I mean, I hate maths. I always hated it, so I don't want to go into the details of it. But if you are a very serious community member, then you will have to understand all this. If you are just a rookie investor, a dumb investor, then you do not need to worry about all this. You can just throw a couple of $100 and try your luck that whether this project will make 10x or not. Generally these kind of rookie investors never make it to the top, because they will always be average Joe. Anyways, now Unilend protocol will support price feeds from various sources including Chainlink, Band Protocol, Uniswap. And so again, this is all about the price feed. You can, it's not that important to understand for me at least, and for you as well, because price feed is I think Chainlink is one of the best in the market right now. So even Uniswap is a huge brand now, so they can also use their price feed. Basically, I will give you a quick explanation. Price feed basically means that from where they track any token's price. So let's say that they want to show their users what is the current Ethereum price, then they will have to use this Chainlink protocol or Uniswap's Oracle to show the current price of the Ethereum, and according to that price range, lending and borrowings entire ecosystem will move. So again, as a community member, you will have to understand all this. But if you are just a rookie investor, then you do not need to worry about anything. Just throw, gamble and enjoy. If you are a serious investor, then you will have to make a way to think about how this project can be made decentralized. Debt entails the risk of liquidation. The process of selling the debt collateral at a discount to liquidators. During this process, the borrower's health factor reduces below 1 as the collateral value does not cover the proper loan debt value. To keep the system active and stable, the DeFi protocols rely on a distributed network of liquidators independently to keep the overall protocol healthy. So these are some of the things which you can go through, and this is about the NFTs. You will receive NFT. Again, this is not as important, but I'm just going to quickly explain that what this is all about. So when you will put some sort of liquidity, you will do some lending, then you will get the NFTs as a security token, and you will be able to use that NFT as a certificate only. I don't think so there will be any other uses for that, but you will have. So earlier this thing used to happen in other cryptocurrency project, but it happened through simple token generation. But here now they are doing, what they are doing is they are giving you the NFT as a certificate that you have lent the asset, and you have probably created some pairs, and for that they give you this NFTs. Now this is the conclusion, and this is the end of the white paper. Yeah, so this was a pretty long white paper. Even though it was only 11 pages, it took some time to complete this video, but I hope that you enjoyed this video, and I also hope that you understand the importance of community bonding, because most cryptocurrency investors act dumb and they do not want to connect with other community members. They do not want to create and build a bond with other community members, and that's why they become a gambler and they start failing. So this is what I have about Unilend protocol right now, Unilend Finance, and I hope you enjoyed the video, and if you did, then I think you can at least give me a like in the video, and also you can subscribe to the channel, and mainly don't forget to join my Telegram group. I will put the link in the description. I think these three things I deserve. So yeah, that's all I have in this video right now. I'll get back to you in the next video.